Hi everyone, welcome to Tuesday where we take a look at the performance of the NZX50 for the past week. Now, before I do that, I just want to let you know of a free webinar that I've got coming up on the 25th of June, and it's at 1 p.m. and it just goes for an hour, and it's on KiwiSaver and retirement, and I'd love for you to join me. I'm pretty passionate about KiwiSaver. If you've been watching some of my videos, you'll probably have noticed that, and I want to be able to give you some information, valuable information to take away with you. You do have to register for this event, and I am going to be hosting it through Teams, so I will pop a link at the end of this video for you. Also, going back to this video, this is for educational purposes only. No way is it intended to be personalised financial advice. For that, you are going to have to talk to your own financial advisor. So let's crack into it. NZX50 gross index up on the screen, and I am recording this on Tuesday morning. The market isn't open yet. However, there is obviously a little bit of pre-market trading going on, and you can see up the top here that we're up 1.12% before the market's even opened. So that could be quite a good sign. Just looking at the chart though, we've had a couple of weeks in a row of downfall. You can see here that this last candle, which illustrates last week, we had quite a reasonable sort of sell-off. And if you look down the bottom as well, you can see by that red bar that it was quite a bit of volume that was going through on that. In fact, 214 million worth of the shares, if you like, traded on the main indices. Now, the thing that I'm going to point out here, looking at that particular candle, and I'll just move my cursor away, yes, the market closed lower for the week than where it opened. But if you see down the bottom, there's quite a bit of a tail on that particular candle. That can sometimes indicate buying pressure, and it can sometimes indicate a positive candle, if you like. Don't want to preempt anything. Obviously, it is better if it is a green candle, meaning that the market closed higher than what it opened. But we'll just wait and see. Let's put our moving averages on and just see how they're looking. So for those who follow me regularly, I like to use the 30 exponential moving average, and I just do it on the close. Here we are here. So that candle alone from last week, because it closed down for the week, it's actually closed below that 30-week moving average. So for me, that's an immediate knockout. In other words, I will not be looking at any further at buying any additional shares. If you follow me regularly, I do like to see the shares obviously trading above that moving average. And you can see that through this period, pretty much starting the 8th of July last year. We had a reasonably strong run through there before it obviously started to move down. And you can see with this candle here on the 17th of February this year, that was the last time that it closed above. From there, it started falling. We've had a little bit of a rebound sort of for 3 weeks, but obviously the last 2 weeks, it is down again. These are natural movements of the market. I'm not out there suggesting that we're going to be entering into a bull or bear market at any stretch of the imagination. Only the charts will ultimately tell us that. Let's also put on the 15-period moving average. So here we go. Once again, they're very, very close, and it could cross through. However, we need to see what's going to happen this week, because a positive sign for me is when that 15-week moving average crosses up through the 30-week. Then it can usually indicate that we are in potentially an upward cycle in the market. So that's something we just need to keep an eye on. Obviously, we want to see good, strong volume as well down the bottom. But other than that, there's sort of not too much to report on the New Zealand main board. Like I say, it's just a wait and see. And sometimes in investing, take no action is actually taking action. Just because you might be in trading share markets and things, it doesn't mean you have to be in the market 24/7. There is time to just take a breath, step back and pause, and just wait and see what the markets, in this case the charts, are actually telling us. So hey, that's it for this week. Come back on Thursday. I've had a great question come in, and this is asking about shares that are dual listed on both the New Zealand Stock Exchange and the Australian. Also, they're wanting to know, is there potentially any arbitrage opportunities and that sort of thing, impact on dividends? So we're going to take a look, and I think I'll look at ANZ for this one. They're a big company, obviously on both exchanges, so we'll take a look at both and see how this pans out. So until Thursday, take care. And just remember, I'd love to see you on that free course for retirement and KiwiSaver. So link is below. You just need to register. Take care.